All right, so welcome to chapter one. We are going to be doing learning objective one today, which is just sort of understanding managerial accounting and differences between that and financial accounting and how it impacts and helps out the functions of management. Okay, so here we go. First things first, managerial accounting basically is for managers and internal users. The information that managerial accountants create is specific to decision makers. They often want to they need to make a decision on something. Oftentimes that decision has effects on cost and profitability. And these are the folks that are called upon to get all that information to inform managers to make good decisions. So it's a really important job. And unlike you probably know from financial accounting, there are certified public accountants, right? CPAs, which are specialists in financial accounting. But there are CMAs, certified management accountants, who are critically important to every organization. And they're the ones who are help the managers make decisions. Okay, so here's some differences. You just came out of financial accounting, where the emphasis was on external users for these reports. So stockholders, creditors, regulators looking at all these types of reports. Well, in managerial accounting, the reports are only for internal users. So managers and the directors of the officers of the corporation are the ones who really these reports are for. And basically they are to help support decision making. In terms of the types and frequency of reports, as you know, in financial accounting, the financial statements like the income statement is done every month, every quarter, and every year. And it's almost like clockwork in that regard. In managerial accounting, all these are internal reports done as needed. Okay, so if something comes up and I need information about something today, that's what it's about. So there's no specific frequency to it. It's just an as needed basis. In terms of what the purpose of the financial reports are, for financial accounting, it's really about general purpose and general information, right? These are going to go out in quarterly reports, annual reports. It's going to be seen by everybody in and out of the company. And so the report is really general. For managerial accounting, all the reports are very specific. And they're all basically, you can say, special purpose reporting. Okay. And that's a big difference. It's a big difference. In terms of what's in the report, the contents of the reports, in financial accounting, you saw that we're looking at the business as a whole, right? This is the total revenue, the total expenses, the profitability, things like this, right? We learned about double entry accounting. We learned about generally accepted accounting principles, or GAAP, in financial accounting. All of these had impact on the content of the report. Well, in managerial accounting, it's different. So first of all, you can learn about costs in a particular unit of the business, whether it's a department or a particular segment of the business. It's exceptionally detailed. It's more tedious work in essence because you need the detail. It's detailed because it's going to be affecting a management decision. Okay. It extends well beyond what the financial accounting reports are. And in terms of here, again, financial accounting had to answer to generally accepted accounting principles. In managerial accounting is, what's the relevance to the decision that has to be made? The report has to be relevant to the decision. That's how the report is based. And in terms of verification, all accounting, financial accounting is audited, right? And the auditors are by CPAs, those specialists in financial accounting. Management accounting reports, there's no audit. There's no independent audit. It's strictly for managers and for their decision-making purposes only. So you probably know some of the management functions because you've all taken the foundations of business class and you've taken a management class, right? So you know there's planning, there's directing, there's controlling as part of those particular functions. Um, well, a lot of these functions are financial, whether it's profitability or market share, adding value to the business, needing to commit to very certain standards or programs that are there. There's human resource activities that you have to direct. There are very specific objectives that have to be met. There has to be incentives that are there. You have to hire and train employees, etc. And then, of course, you have to make sure everything is kept on track. Controlling is really about tracking to see if things are going according to plan. And if they're not, they have to be put back on track, in essence. So you have to kind of update the plan, right? And so all these functions are part of management functions that often require input of managerial accountants and the reports that they produce. So that's why they're important. Okay. I love the dog more than I love Louis Vuitton. I can't even pronounce, the name. But anyway, one of the things that you need to, these little stories are in the book are actually quite good. I like them better than the financial accounting book. And here they give you an inside look at how Louis Vuitton, which manufactures handbags, wallets, suitcases, etc., actually adopted something called a lean process. And a lean process is sort of looking at the steps involved in producing the items that they make and the costs that are involved in producing the items. And oftentimes when you are looking at a lean process, you're looking at, is there any way to reduce the time and reduce the waste? So what happened is they were able to reduce time and waste that used to take 20 or 30 workers 8 days to produce various things. Now just takes 6 to 12 workers 1 day to produce. What are they producing? Whatever their hot products are. Okay. This whole thing of managerial accounting and looking at costs really is a prominent player in how corporations and businesses have changed over the years and why things are done differently over time. We have a much better understanding of the cost issue. And I think that's extremely important to know that it's really managerial accounting that is helping in this particular process. And you can read the rest of that, but I just thought it was important to sort of understand where it all fits. You've all seen organizational charts by now, but again, it's looking at, where those relationships are. Again, the owners of a corporation are stockholders. Stockholders of corporations do not directly manage the corporation. Instead, they are represented by a board of directors who are sort of have a responsibility to the stockholders to make sure the company is getting a higher return on their profit. They want to make stockholders wealthier over time. So the board of directors sets up and backs policies that will increase the wealth of the owners. They are the ones who hire the CEO and president of the company and the upper management team or the executives of a corporation. So in essence, they're reporting directly to the board of directors who represent the stockholder. Okay. So these are the folks that are getting everything done, and that's somewhat important to sort of understand and know. All of those folks, by the way, are relying on managerial accounting information, believe it or not, to help guide their decisions. All right, and at the end of learning objective 1, there are always do it exercises, as you are well familiar with from taking Wiley, Accounting 104 with me with Wiley. So let's review this. These are true or false statements. So again, I even give you 3 times, 3 chances on true false statements. I think I'm a hell of a guy, for doing that. If you get it wrong all 3 times, whew, I don't know what to say, on that one. But it's not like it hasn't happened in the past. I just don't know what to say. I really don't. All right. So true false statements. Managerial accountants have a single role in the organization to organize, collect, and report costs to management. They have a single role. False. They have multiple roles that they actually play. They're highly engaged, and they are people that managers really rely on to help sort information and get good decisions done. Financial accounting reports are general purpose and intended for external users. We know that's true. Managerial accounting reports are special purposed and can be done as frequently as needed. We also know that's true. Managers' activities can be classified into 3 broad functions. Now, the functions part is the key here. And we know that that is false. It's the planning, directing, controlling functions that are mentioned earlier. And managerial accounting reports must comply with GAAP. No, they don't have that standard as well. They do not. So there you go. Your first little lecture for managerial accounting. As you can see, it's different.